How's it going, everyone? Although I suppose if you have been holding onto XELA stock recently, not very well. XELA took a 10% hit during Friday's main trading session, dropping from an opening price of $2.96 to close at $2.66. And if you are following the stock and the short squeeze, this may have you a little bit worried. So this video is a brief look at the latest trading trends, an update on the short squeeze, and I'll share some thoughts on what I think is actually going on with the stock. Ultimately, what we'll hopefully be able to do is make a better judgment on whether the short squeeze is still a play or not. But before I do that, I want to quickly remind you viewers here that I am planning on setting up my channel as a social enterprise going forward, meaning that I want to use the money raised from the YouTube advertising to support a range of good causes that I feel passionate about. I think it's a unique way to make a difference. Rather than people donating money, people are supporting the causes simply by watching videos like this one. So I want to encourage people to sign up to the channel and support this. We are getting close to the 1,000 sub mark now, so thank you to everyone who has joined up so far. With that out of the way, let's get into the Exela Technologies stock update. So diving into the charts to start with, this was the state of play from our last update 2 days ago, just following Exela Technologies' mixed earnings results and the $7.5 million deal they had just announced. The results came out in this session over here, and the $7.5 million deal was announced during this session here. However, since these announcements, Exela Technologies has been declining, with Friday's session seeing a particularly steep drop off. Now, just to make sense of the drawings on this chart, I have a number of shaded areas representing points where the short traders have been caught out and their positions are currently distressed. Red boxes reflect areas where there are definite short positions under stress, and yellow boxes represent areas where short traders are possibly caught out on. We also have this blue line, which to me is the point where the short squeeze can really start to come undone if it is breached significantly. Now, given what happened on Thursday and Friday with the price action, a number of trapped short sellers will have been able to get out of their positions. As a result, this is what our new chart looks like. We have lost all of our most recent shorting action that was caught up in the short squeeze, and there has also now been a reduction to the nucleus of the short squeeze as these important trap positions from back in July have been slightly breached. While this is a bit worrying for players of the short squeeze, we have not reached DEFCON 1 yet, as our $2.65 mark has held up so far. However, I believe any further breaching of this line when trading resumes on Monday will potentially wipe out the core of the remaining short squeeze effort. In a little bit of a more hopeful sign, the RSI has clung to the lower bound for most of Friday's session, suggesting that it was a period of being oversold and may be set to reverse. This is also backed up by the trading movements within the Bollinger Bands for Thursday and Friday's trade, which sees the candlesticks basically cling to the lower bound and hardly touching or crossing the moving average line through the middle. Both of these are indicating that the stock has been going through an oversold period, which can but doesn't necessarily mean the stock will bounce back soon, at least in the short term. For me personally, I did manage to expand my position a little, selling off at $3.01 right at the very start of the day and rebuying a slightly high quantity of stocks at the $2.85 mark. Unfortunately for me, however, the stock did not come back from there. On a slightly more pleasing note, however, Exela did manage to recover some of its losses in the aftermarket session, climbing back to $2.75 per share. So this perhaps supports the thesis that the stock has been oversold recently. Looking at the latest shorts data, Exela saw a big uptick in shorts activity yesterday, which to me suggests that there were a number of people getting out of their existing positions. This is further evidenced by the fact that the short borrow fee has fallen to 7.41%, which is down from over 8% 2 days ago and over 9% on Monday. This means the risk of loaning shares for shorts trading has reduced because both the amount of short positions that failed to return has reduced and the current stock price is closer to the average short entry point. The other data point I want to raise, which may be a bit of a slip up from MarketWatch, however, but what I have noticed in their latest update of most short stocks, Exela, which has been in the top 10 most short stocks for the past few weeks, has fallen off the list altogether. It may be an error, but if this is an accurate list, it means its overall percentage of float currently shorted has fallen below the 23% mark. For some perspective, it was almost 37% just a couple of days ago. So potentially another bad sign for the short squeeze effort.
Kill the balloon! Kill the balloon! Kill the balloon! Kill the balloon!
So moving on to what has been influencing the Exela stock price lately, It has been a busy few weeks in news terms for Exela Technologies. Thursday's trading day opened with some further good news for Exela Technologies, with their smart office suite being identified as one of the 3 hot vendors in workflow and content automation by Aragon Research, an independent research and advisory firm. So this is a vote of confidence for Exela Technologies offerings and may be an indirect catalyst for future sales for the company. The news was not of material importance like the announcement of the $7.5 million deal that the company announced the day before on Wednesday. So despite this back-to-back good news, why has the market been reacting so poorly towards Exela Technologies? That question is a little bit of a harder prospect to pin down. We have commented in a previous update that their June financial results were quite mixed, but I think the stock has been caught out in a general selling off of meme stocks that has occurred on Friday, with many of the recent favourites really suffering. This seems to be on the back of a return of money towards more blue chip and industrial stocks, which benefit from the economy returning to a greater state of normalcy, as well as the developments around the large infrastructure bill that is currently in the works in the United States. Unfortunately for Exela Technologies and other so-called meme stocks, these stocks have a stronger element of speculation about them, and therefore they are more prone to having investment pulled away as quickly as money can come into them. The trend of money being pulled away from meme stocks, I think, has been heightened as a number of them did not meet earnings expectations recently, including some which I have been covering on here, particularly Workhorse and Wish. However, finally, I think Exela Technology might be suffering from broader macro trends. I think there is a sense of unease about the markets as many participants may be worried about COVID-related restrictions coming back in, which will hurt the economy in the United States and could be the catalyst for a major market reset. It is no secret that many places in the world are seeing huge spikes in the Delta variant of the virus, which seems to be causing an uptick in cases and deaths even in areas that have high levels of vaccination. Here in Australia, for instance, where as a country we aren't as widely vaccinated as many parts of Europe and the USA, we currently have much of the country under lockdown due to small outbreaks of the virus. So there is a very real possibility that this could wreak havoc on the markets once more if restrictions were reintroduced, and I think market participants are on edge in the event something around this may occur down the track. And in the event that it does occur, generally the more speculative assets such as the meme stocks are likely to get hit the hardest first. So this could be some people moving money out as a way of hedging bets. So on to my final thoughts. The short squeeze I think is still in play for now, but if the short squeeze were to go away, we may actually get to see some more normalized trading return for the stock. I think the company financially is looking much better than they were in the March quarter, and there are some signs of returning sales. However, it's still worth noting that their books generally are still really heavily indebted and they have a lot of negative equity. I do believe things are turning around for the company, so this could be a good opportunity to buy the dip if you do think it is something worth doing, but that is your decision to make. I'm not here giving you investing advice. Anyway, what do you guys think? Have we seen the end of the short squeeze? Would I be a fool if I were to buy more of the stock at the current price levels? Let me know what you think in the comments below. If you'd like to see more Exela or other stock related updates, I encourage you to subscribe to the channel. By doing so, you are helping to support the social enterprise initiative I am hoping to turn the channel into in the near future, where just by watching videos, people are helping to support good causes at no financial cost to themselves. So I encourage you to be a part of that. It's a good opportunity to use the power of YouTube for a social good. Anyway guys, until next time, may the markets trade in your favor. Cheers.